Hello everyone, welcome back to Capital Karobar channel. As on the screen you can see the title is what is share? Yes, and below line is saying in layman term. Yes, that is the specialty of this topic. I'm going to cover in such a way that even a person have no financial background, they should be able to understand what is share, what is equity, and how they can trade. So at very basic level I'm going to discuss about this. Okay, let's proceed. Okay, over the screen, as you can see, two pictures are there. One is tea garden and other one is a factory. So to make this understand in layman terms, let's create one fictional story. Suppose Mr. A started a business in Assam, bought one tea garden along with factory. It is started growing, and thereafter comes the need for expansion to neighboring states, which need further capital. Obviously, Mr. A started a business, as you have seen in the previous slide, and alone he started, and business started growing and he earned lots of profit. So he decided to expand the business further in neighboring state. So what he need? He need capital, additional capitals. Now there are two options with Mr. A: add capital from own side or borrow from the bank. But this option is not good, as he has to pay the huge interest and it will hit the net profit of the business. Obvious, if you are having additional capital from your side, it is good, but if you don't have, the other option is to borrow money from the bank. But if you are taking a huge amount as borrow, as you are going to borrow from the bank, so lots of interest will be there, and surely it is going to hit the net profit of the company or your business. So it is not good option as decided by Mr. A. So let's see what option he's going to implement to have additional capital. Add partner with additional capital. Yes, the second other option can be add your friend as partner with additional capital. You can say that, okay, infuse some particular amount and you can give 30%, 40% or 50%, whatever may be the plan, and you can expand the business. So Mr. A decided to go ahead with the partnership to avoid risk and seeing other benefits. Okay, now all the partners started working together, and by luck, in many years or few years, you can say their tea became famous all over the country, and even export also started. They need further expansion. So what to do for additional capital? But adding partners beyond certain limit is not permissible as per law, and also other challenges can be there in terms of management. Also, it is not easy to find many trusted partners of sound financial background. So these are the limit with the partnership form of trading. There is a third kind of business model besides sole trading and partnership. So these are the two different models. What just now we have discussed, like sole trading, when Mr. A was doing business alone, and when many other persons have joined to him, it became a partnership form. So these are the two different forms of business. Now the third option is called the joint stock company, or you can say a company with thousands of investors, where the investor can invest even rupees 10 or 100 or amount of their choice. Okay, so this is a third form of business, and to make this very clear in terms of monetary form, I have again quoted the example of, suppose old capital as partnership form. When Mr. A and his partner was doing business, the total capital was invested there was rupees 1 million. Okay, this was the old capital, and new authorized capital is rupees 10 million. So when I say authorized capital, means it is authorized by government. You cannot just decide like, okay, I am going to start a joint stock company with 100 million rupees or dollar, and you will no. You have to go through law, under the law, and you have to take permission through government, like in India, Indian Companies Act there, and you have to follow that provision. So authorized capital is of 10 million. This is the new capital for joint stock company. Hope you all are clear till this point. So Mr. A and partner want to hold the ownership of rupees 6 million. IPO or public offer, you can say offer to public rupees 4 million of rupees 10 each as face value. Now rupees 4 million divided by rupees 10 equal to 4 lakh shares. So here we are seeing the first time the term shares comes. So we can say that what is shares? Share is a total capital divided into pieces, and those pieces once distributed among general public, so that pieces of ownership, you can say in a layman term, you can say this is pieces of ownership to the company, or you can say for the company. Okay, so that is share, and rupees 6 million divided by rupees 10 equal to 6 lakh shares. So what you found there, that the total capital distributed among many parties inclusive of promoters. So promoters are here Mr. A and his partners, and general public, or you can say public offer is for rupees 4 million, and 4 lakh shares are there for public, and 6 lakh shares for Mr. A and partners, or you can say for promoters. So the basic logic why I have shown here as a 6 million, in most of the cases you will find that majority of ownership or shares are stand with promoter, because they don't want to dilute the their decision capacity or the ownership or management capacity. If majority number of shares will be there with them, they can decide on company in future, because they have the power, you can say in terms of ownership. Okay, so I hope you are clear till this point. So before moving ahead, let's try to understand what is face value and market value. So to make this very clear, I am taking the example of shares of Reliance Industry. Reliance Industries shares face value is rupees 10, and in the market you may be observing that its shares price is around 2200 or 2300. So 2200 or 2300, whatever is getting sold through the price of particular share of Reliance Industry, that is market value. So in this case, rupees 10 million is the total authorized capital, and 10 lakhs are the shares. If it divides that 10 million, that is the authorized capital, or you can say book value, it is the quoted value in the book of Mr. A and his partners company, proposed company, you can say. So whatever figure is coming here, it is rupees 10. So this is face value. But once it is floated in the market, the price at which it is getting exchanged with a different investor, so that is called market value. Okay, so let's move ahead. So that was the question, like 4 million rupees, how it is going to be raised through market. So initial public offer, this is the term you might have heard many times through television or through hoarding or through newspaper, that particular company's IPO is coming, the price band is 250 to 270, something like that. So similar kind of scene is here too for Mr. A and his partners company. Now Mr. A and partners can hire investment bank. So banks are also providing this kind of service for raising capital. IPO is announced through circulation among general public, as I told, through newspaper, television and hoarding. Public apply online for the desired quantity, and all those investors or public who want to subscribe this particular share, they can apply online, because now all the things related to shares, market or bosses, everything, all transactions are online only. So that is the best medium, you can say, that is the only medium you can say available now for applying for IPO. So let's go ahead with the one more term, that is over subscription and under subscription. So total number of shares which is going to be floated in the market through IPO will be 4 million divided by 10. So it was coming 4 lakh shares. Suppose through IPO the total application came for allotment from public is 10 lakh. So this is oversubscription, because though the shares number of shares available for IPO only 4 lakh, though the application came for 10 lakh. So this scenario is called oversubscription. But in case suppose only 2 lakh application for 2 lakh shares came, that is called under subscription. In case of oversubscription, the shares are allotted in pro rata basis, proportionately. Okay, so shares are allotted on pro rata basis to all the shareholders through primary market. So once the shares are allotted, those shares are shifted to their demat account. So next comes the secondary market. So when NSE and BSE, we are seeing that, and in the television or in the newspaper, wherever we are seeing the price of particular share that today it reached 52-week high or 52-week low, whatever price you are seeing, all those are from the secondary market. So NSE and BSE are two major Indian stock market, or you can say Indian secondary market for share. So once through IPO it is raised, and later on whatever exchange is happening among investors for particular shares, and the prices keep changing, all those are happening through NSE and BSE. Okay, once it hit the floor, it's keep changing hands of investor, and price keep fluctuating based on various intrinsic and external value. So intrinsic and external, when I say intrinsic, means it's all about company fundamental. I mean their performance in terms of operation, their client, their margin, their profit, earning capacity, all those things are intrinsic factor. External factor means in which sector the company is working. If it is in pharma, then pharma sector overview, how the market is, how the future is, and impact of international market. Some other factor can also be about like whether relation between two countries. Suppose one particular company's businesses in Pakistan, and the relation between Pakistan and India is not good, and some law came into effect, which is going to impact that business. So all these are extra and internal factor for share. So these are the things. No difference in share market and tomato market. Yes, friend. At last, I hope you all understood about the share market, or you can say about what is share in layman term. I have tried to explain about what is share in a very basic form. No jargon has been used, minimum jargon I have used, and at last I am saying that there is no difference between share market and tomato market. The only difference is that in share market you are selling share, in tomato market you are selling tomato, or buying or selling those respective things. Okay, broadly no difference. At high level, prices of both are driven by supply and demand. Maybe factor will be different. In case of share you are seeing the earning capacity of company. In case of tomato you are seeing only supply. If more supply, the price of tomato will fall. In case of share also, if more supply, the price of share will fall because more people want to sell. I hope you are clear and well understood now about what is share, and if it really is liked by you, I expect that you like the video, subscribe the channel and share among your friends. It will really motivate me, and as I promise that regular videos will be available through Capital Karobar channel, I am committed. Thank you very much once again. Have a good day.